Ladies and gentlemen, good day and welcome to Mold-Tek Packaging Q4 FY2024 earnings conference call hosted by Nirmal Bang Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Navalgund from Nirmal Bang Equities. Thank you, and over to you, Mr. Navalgund.
Thank you, Ranju. Hello, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome you all to Mold-Tek Packaging 4Q FY24 earnings conference call. We have with us Mr. Lakshman Rao, the Chairman and Managing Director of the company, along with the entire finance team. Without further ado, I would request Lakshman sir to start with his opening comments, post which we can open the floor for question and answers. Thank you, and over to you, sir.
Thank you, Abhishek, and thank you all the participants who are online. I'm happy to be here today to talk to you all about the Q4 results and the year ending March 31st, 24. As we have on hand, the sales volumes for the year has increased close to 5%, 4.84% in terms of sales volume. Revenues look they dipped because of the raw material price reduction. So we always go by with volumes. So volume-wise, there is an increase of 4.84%. The main segments which have grown rapidly were food and FMCG and Q-Pack, whereas the paints has registered a negative growth. And secondly, we have the good news is that we have started our pharma commercial production in our pharma plant at Sultanpur, and there's a very good response so far, and numbers are also sticking in terms of sales volumes from April onwards. That is the good news. And also, we have started the two plants of Aditya Birla Group at Panipat and Cheyyar. They went into commercial production sometime in March this year, and the numbers are improving starting from April onwards. So that way, these two are the major positives which will take forward the company's growth in the coming years. One is the two plants of ABG, and the third plant will be getting ready by October, November. That is at Mahad. So these three plants will be adding considerable numbers to us in the coming months or maybe coming years. And the pharmaceutical entry brings Mold-Tek into the foray of pharma packaging, which is a very high growth and high value add line of activity. This is briefly the data about the company. But anyway, we'll share more details during the question and answers. I now ask the moderator to go through the Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Jayveer Shekhawat with Ambit Capital. Please go ahead.
Sure. Thanks for taking my question. Mr. Rao, first question is on your thin packs. So we have seen that growth during this quarter has fallen to single digits, and most of your growth in the FNF segment is being led by the Q-Packs. So I want to understand what has led to this single-digit growth in the thin packs, given we have been experiencing very intense heat waves across the country, and that should have ideally resulted in higher ice cream volumes for you. If you could clarify that.
Yeah, the previous year numbers are what counted in the total year, because April to June of this year will come into the Q1. So the ice cream consumption picks up from middle of March and peaks in April and May. So last year, if you all remember, there were a lot of rains and early set of monsoon, which has impacted the ice cream industry by more than 17 to 20%. So that is one of the reasons why our food and FMCG numbers are down to the single-digit growth. And couple of projects like Kisan Jam and Horlicks, which we have supposed to have started, were delayed into this year. Just now in April, May, we have started their commercial production. So that is one of the major reasons why we could not post a double-digit growth in food and FMCG. Coming to Q-Packs, not only edible oils, but many other sectors have started finding the usefulness of Q-Packs, and our ability to push our IP rights in the High Court of Delhi and subsequently stopping some of the competitors who are copying our designs without consent and using them. That also helped in establishing our products better in the market. And today we have seen 80% growth in Q-Pack sales in the current financial year. And even the trend during the first few months is still better. We still see a growth of very high, maybe at least 30 to 50% rise in Q-Pack numbers even in this current year.
Sure, that's helpful. So if I understand it right, given that the Kisan and the Horlicks volumes will also come in, and plus the ice cream sales that have been pushed to 1Q, do you stick to your earlier guidance of maintaining a 20 to 25% growth in your thin packs?
Yeah, with the addition of Panipat Tinwal facility getting into production by August, probably we thought of June, July, but probably it will go into July, August. That will also be adding numbers for the sweet boxes and other products. Ice cream, we might miss the ice cream season, but other product sales will be adding the numbers from July, August onwards. So we are still confident that we will be aiming at 20% volume growth in food and FMCG Tinwal also, apart from a good jump of 30 to 40% in Q-Packs.
Sure, sir. And secondly, sir, on your paint segment, we have seen that sluggishness over many quarters now. So, except for Grasim, what's your expectation for the next year from your existing clients?
See, our Grasim plants have gone into production now, and current consumption, if things go as well, they are very close to their projections. Like they were mentioning, 2 plants to contribute about 4,000 tons for the year. So now currently, this month, I would say in the month of April, May, in May, we have almost about 200, 250 tons of sale we could achieve with them. So if the same trend goes or improves, we may be able to reach 3,000 to 4,000 tons of sales to Aditya Birla Group in the current financial year, which was hardly anything last year. Last year, March, we made hardly maybe 100, 200 tons all put together. But steadily from April, the sales are in the region of 200 to 250 tons, at least 200 tons. So it may pick up as they also improve their productivity. And also, Mahad plant will get into production from October, November. So probably last 4 months of the year, Mahad also will contribute to some numbers. So we are still confident we will be in the region of 3,000 to 4,000 tons. At least 3,000 tons for sure is what I am expecting from ABG, which is almost 8 to 9% of our total volume.
Sure. So my question was in terms of your existing clients, excluding Grasim. So what is your expectation of growth for those clients? Because we have been seeing falling volumes from those clients over the last many quarters. So what's your expectation there?
See, there are 2 reasons. One of the major drop in our volumes is because we let go some of the small paint companies last year, and we're not pursuing those orders because of high competition and low pricing. And purposely, we are using those capacities for our Q-Packs, where we have better value addition. So that is one of the conscious decisions why we have taken a hit in the paint segment. And also in the case of our major client Asian Paints, last year numbers were better in the Q2, Q3 and Q4 because we have developed low weight containers first time, and we were given the entire volumes, or if not entire volumes, majority of the volumes during the Q3 and Q4, which now been developed by other competitors also. So their volumes have just started shared, and in the Q3 and Q4 of the current financial year, those numbers look negative in the sense we have lost sale. So that is one of the reasons why our overall paint numbers are negative, because when compared to Asian Paints, all other paint sales put together will not even be one-third of what is Asian Paints contribute to us. So when Asian Paints Q3 and Q4 numbers have fallen, we got hit. That fall is mainly because of this thin wall molds were now shared, the volumes are shared between all other competitors also. So that advantage we didn't have this year. So that is one of the reasons why there is a dip in the paint volumes.
Sure, so that's helpful. Last question on the pharma packaging side. So how much more time do you expect for the customer audits to get completed and your commercial supplies to start for all the products that you have been developing? And then what would be your revenue expectations possibly this year and possibly over the next 2 years as well?
Yeah, I'm really happy the way we are getting the response for our pharma packaging facility. Actually, the facility, I also request all of you on this call to come and visit our plant to see how world-class facilities we have set up, and those facilities are having impeccable hygienic conditions that are required by all the pharma companies across the world, I would say. And I'm also very glad that unlike others who have typically bottles and caps, we have come out with 3 product range, that is canisters, EV tubes, that is effervescent tablet tubes, and tablet containers and caps. So all these 3 range is giving us a very good advantage when our marketing people approach a client, because they generally buy these 3 products from 3 different sources, and there's always a conflict of matching volumes or quality issues and audits, several audits they have to do. So now in one go they will be finding one company which is giving all 3 major packaging needs of a company. And apart from that, we have added in-mold labeling for EV tubes for the first time in the country, which is giving us an excellent advantage. Wherever we went and submitted or showcased our IML capabilities, there is a positive response. And actually, now the commercial sales are happening in a reasonably good manner in EV tubes, even in the month of April and May. In the month of May, at least I can comment, we crossed 5 lakhs EV tube sales, and things can improve further because there are so many other products under development. So the advantage of IML in EV tubes is very, very evident, and we are in a position to exploit that situation to our advantage, because none of our competitors as of today, though they are there in the field for the last 5 to 6 years, have set up the IML capabilities. Even they set up, they couldn't give the quality that is demanded by the clients. So we are first people to break the ice in IML EV tubes, and that is going to give us an edge, I'm sure, not only in Indian market but also export that are available. Coming to the canisters, I told you all last quarter also that we are introducing canisters that are with laser marking and single piece, whereas the competition that is there in the country today are 2-piece with a printed paper wrapped on it, which can cause ink, digression into the medicine, and various pharma companies are having issues with that. So with our laser marking, that problem is solved, and being a single piece, the risk of opening of a canister is completely eliminated. So with this USP, even canisters, we are finding very good response. Already 3-4 companies have taken, even I don't want to name the companies, some of the top-notch company in the country also has taken up our stability tests. Those tests might end up sometime in July, August, and hopefully commercial production and good numbers can start for the canisters from then. Coming to the bottles and caps, the regular bottles and caps, we already have Indian top players like Akums and other 2-3 companies started picking up for the domestic market needs. Small volumes are happening, but very big companies in pharma have already taken up stability tests. And they are so big, the inquiries, that even if out of 3-4 who have so far visited us and visiting us soon, even a couple of them decide, or 2-3 of them decide on the numbers what they have indicated, our capacities will be almost filled by that time. Probably it may take 6 months because of stability tests, sample evaluation and all that. We will be submitting, some of them are readily available in our molds. Some of them new molds have to be made, and 3 months down the line we give the samples and then they take another 3 to 4 months. So hopefully by third quarter of this financial year, we will be running our pharma to a reasonably good extent capacity utilization, something around 70 to 80%. And that can yield at that stage probably around 2 to 3 crores turnover per month. So taking all this into account for the current year, for 6 months I am not looking at big numbers, but for the next 6 months the numbers can start improving. And a full year we have kept a target close to 20 crores for this current year. And next year it can easily double because all these clients will be going in a smooth way and supplies will be just happening without any hindrance, and new clients will be added. And looking at the kind of demand and traction we could create, probably during that period at the Q3, Q4, we have to take a decision about expanding our capacities. But however, I'll keep that to be reviewed during the Q3 time, in the time of Q3.
Sure, sir. I think this is very helpful. Thanks a lot for answering my question and wish you all the best.
Thank you.
Thank you. Next question comes from the line of Jenish Karia with Antique Stock Broking. Please go ahead.
Yes, thank you for the opportunity. First is a data keeping question. If you can just help us with the segment-wise and IML-wise volume and revenue numbers for the quarter and full year.
Yeah, IML more or less stagnating around 64% for the last year and this year also. And coming to the segment-wise volumes, paints have dipped in the Q4 by 9%. Lubricants are stagnant. Food and FMCG also down by 10% compared to the previous year Q4. Q-Pack is up by 75%. So total overall growth volume compared to Q4 is flat, just 0.5%. But in the food and FMCG together, along with Q-Pack, the growth is 21%. So ultimately the total volumes are flat, just by 4-5 tons. So that is the breakup between the sectors compared to Q4 to Q4.
And sir, in revenue terms?
For the full year,
yeah.
Paints are down by 6.7%, Lubes are up by 3.4%, Food and FMCG 6.9%, Q-Pack by 88%. Overall growth is 4.85%.
Okay, so similar numbers in revenue terms, if you can help us.
Sorry?
If you can help us with the similar numbers in revenue terms, these are volume numbers, right? So
in revenue terms, it's all because of the raw material. But anyway, for paints, it is down by 15% for the full year. Lubricants also down by 5.6%. Food and FMCG down by 0.17%. Q-Pack up by 70%. Total minus 4%. Because basically, when the raw material prices fell considerably from 110 to 95, we passed on the pricing to the pricing advantage to the whatever raw material price to consumer and our clients. Hence, the revenues always look in tandem with the raw material prices.
Okay, that's helpful, sir. So, next, I just wanted to confirm that you mentioned in fourth quarter we did 100-200 metric tons of volume for Grasim, right?
Yes.
And what would be the volume of our pharma segment in the fourth quarter?
In the fourth quarter of this last year, you mean completed year?
Yeah, fourth quarter FY24.
No, only in the fourth quarter, sometime in February, we started some commercial production. The capacity is around, per quarter, around 400 tons, you can say. So, more or less, most of the machines are erected and commercial production started in January. But the numbers are yet to pick up. From April, May, we are seeing the numbers picking up now.
Okay, that's helpful. So, next is on the volume growth and the margin. So, despite 0% volume growth for the quarter, our margins for the fourth quarter reached 39 rupees per kg. So, is it because of the pharma just running for 2 months, or there is something that we are missing out? Because Grasim was also a smaller volume, pharma was also a smaller volume, but still we achieved a 39 rupees per kg margin compared to the 9-month earlier average of 35-36 rupees. Any comments on that?
The improvement is mainly because of increase in sale of Q-Pack, which contribute around 43 to 45 rupees per kg, compared to paint packs which are below our average. It's somewhere around 30 to 35. So we are now using more of the capacity for Q-Packs of the paint capacities. Machines that are meant for paint are being utilized for our Q-packs. They are not very great like food and FMCG, but definitely better than paint. So that is where we are able to get a better EBITDA per kg. And some annual discounts of raw material also added about ₹1 to the benefit of this quarter.
That's helpful, sir. Next is on the capacity consolidation that we are doing. So how much of the benefit that will flow to the EBITDA, how much of the overheads will we save? How should we look at the consolidation exercise? Is it just rationalization of capacity, or will there be some benefits which in monetary terms which will accrue?
Definitely the consolidation is going to help the company in controlling the costs, even getting the value of the land and assets back into the company for utilization. I can't quantify that now, but definitely it is going to be considerable because Unit 2 used to be a fairly big unit with about 10-12 machines, and those machines have been now scattered to Vizag and other plants of Hyderabad, and that unit is more or less near to the closure. And the second unit of Unit 6 is basically a printing unit. That's where the printing happens, but unfortunately due to space constraint, we were doing printing at that location, we are doing printing at Sultanpur, and then die cutting is happening at our unit at Annaram. So, and then the die cut pieces of IML have to be transferred more to Sultanpur and also to Daman and other locations. So all this is causing several locations are causing lack of accountability, some more wastage in terms of curling or in terms of rejection. And now that at Sultanpur, at central unit, we are going to set up all the printing machinery, including die cutting, storage and distribution. It's all going to be under one roof. It is a 3-storied building where from top to down, there's a logistically controlled way of manufacturing the IML labels, which is going to save enormous, if not enormous, sizable amount of wastage reduction, cost reduction would be expected from that operation. And by curbing Unit 2 into Sultanpur, Vizag and Hyderabad, we are letting go one overheads of entire team there because the same teams in these 3 units are now taking care of that production. And Unit 4 is another small unit which has been running for mainly Asian Paints local Hyderabad needs. And that is too small a unit to have head of plant and quality and all other people around. So those savings also will come from sometime towards the end of this year because that we are planning to do at the end. First is Unit 2 which is completed. Unit 6 is printing. So the integration of printing will happen by July, August, maximum in 6 months from now. And then we will take up the integration of Unit 4 to dissolve it between these 2 units. And Unit 1 at Annaram and Sultanpur will become 2 major plants which will be absorbing these 3 plants.
Yeah, thank you for an elaborate explanation. Just one last question. Could you reiterate your guidance in terms of capex for the next 2 years? How much capacity will be added and your volume growth for 2 years and the EBITDA target that we are doing?
Yeah, we are hopeful that the EBITDA should cross 40 again in this current financial year, up from 37.7 which we could achieve last year. So we are hopeful that we will be in a position to come above 40 again because of 2 reasons. One is better capacity utilization at all the new plants which were just started 3-4 months ago. And second is better product mix, more and more of Q-packs and food and FMCG and even pharma that will contribute handsomely to the EBITDA should take us above 40. And given these figures, we are expecting a volume growth from 4.8 to at least 15% plus because ABG alone would be giving us at least 8 to 9%, 7 to 10%, let us say, depending upon how they shape up their market share. So they themselves will be giving us a good jump in volume. And our Q-pack will continue to give us good numbers. And pharma is adding. Food and FMCG seems to be doing better than last year because, as you said, the summer is very wild this year and consumption of ice creams is reasonably good compared to last year. And with that, probably we'll be in a position to see a 15% plus growth in the volumes and improvement in EBITDA to the tune of at least 40 rupees. That is our estimates.
And the CapEx guidance and capacity additions that we'll be doing in tonnage?
See, capacity addition will be based on need. Actually, huge capacities have been added in the last 2-3 years, you are all aware. And those capacities are set to go into production this year. Only Mahad plant is to be created in this year, that being a smaller plant, probably the investment will be in the tune of around 15 crores in the first year. And later on, we'll be adding other machines, but as of this year, after land being already acquired, additional investments would be tune of 15 crores. But investments in pharma, investments in other balancing equipment, mainly for IML and Panipat, Tidwal, and even in Panipat, we have a plan to start some domestic pharma products because of some demand indicated by some big clients. If those plans happen, again, there will be investments, but there won't be as much as last year. Last year it was 140 crores. Probably we may still have at least half of the investment plan for the current year, which again depends upon what we have to do in pharma. If pharma takes off in a big way and then we need to quickly invest there, probably it may go up. As of today, we are looking at about 70 crores investment possibility in this current year.
Okay. Thank you for patiently answering all my questions and all the best.
Thank you.
Thank you. Next question comes from the line of Prathamesh Tahake with Motilal Oswal. Please go ahead.
Hello, I'm audible?
Yeah.
So I just wanted to ask, as of FY24, what was the total capacity that we have installed for Asian Paints? What was the capacity utilization of that? And how do you see capacities being added at Asian Paints level and the volumes going forward?
See, there is nothing called capacity only meant for Asian Paints because all the plants, all the machines are fungible. But however, as you said, there are plants which are mainly meant for Asian Paints, I would say, is Satara. That is where only Asian Paint products are being produced. Whereas in Vizag, we have now Castrol, we have Valvoline, we have several cashew company square packs, edible oil like Gemini being produced there. So now Vizag has become a plant which is producing for several clients. Of course, Asian Paints would be more than 50% of its capacity, but it's not totally meant for Asian Paints. Similarly, at Mysore, we have now cashew products, we have some edible oil products also being produced, started production. So, given all our plants, only Satara plant with an installed capacity of about, what is Satara say? 5,000 tons is more or less meant for Asian Paints. And the capacity utilization there is hardly around 60%. Last year it was only 56% to be precise. That is the only area where we have under capacity utilization because we don't have any big clients in and around that area. So other than that, other plants are fungible capacities where we can either produce lubricant containers, we can produce square packs, depending upon the capacity availability and the nearness to the clients.
What was the contribution from Asian Paints in terms of volume and revenue in this year?
Contribution from Asian Paints is sizable. They continue to be our major plant. Almost 12,000 tons, I guess, would be from them. That is almost 1/3 of our sales.
Okay. And sir, FNF involved in this quarter has been a bit soft. What are the areas or end segments which you felt did not receive traction as compared to what we would have planned?
Yeah, the volumes of ice cream have not picked up in March. They started late, but they are good in April onwards. So up till March, generally we used to see a good traction in March itself. But this year in March, the numbers were not so positive. And another reason was that in the case of food and FMCG, the products like Kisan and Horlicks, which we have developed more than 7-8 months ago, were going through various trials and corrections. So ultimately, only in May, we started the volume, more than 1 million pieces were sold. and Horlicks also started picking up numbers now. So those molds which were made, capacities that are created, were not used till April, May. So that's one of the reasons why the Q4 food and FMCG has dipped.
Understood, sir. So going forward, apart from ice creams, Kisan, what are the product categories that we are planning, and do we have customers onboarded for the same, or it will come as and when the capacities at Daman and Panipat come up?
No, certainly as in when the capacity set Panipat, Daman is now deferred for a while. We are concentrating on creating thin wall capacity at Panipat now. The Panipat will be catching up for the festive season with sweet boxes and other products that are meant for various food applications. That will be starting from July, max August. So that will be the time when we will be seeing that some numbers coming in from Panipat. But I would say next financial year only, that is the next season starting from March, April, we will find good numbers coming from North. So that will be a new addition altogether because our distance is a very big negative for customers who are in the North because their numbers and requirements happen very fast and our transport cost and transport delays can impact them in the season. So that is why they prefer nearby suppliers. So by setting up a plant in North, we hope that a disadvantage will go and we will be able to gain a market share there.
Okay. One last question, sir. So in paint segment, apart from the existing clients, do we have any plans of onboarding new paints or new paint customer or adding capacities within the existing customers?
See, as and when the paint companies are moving towards IML, we are ready to take them. In fact, very recently we added one client in Hyderabad itself who has shifted completely his product range into IML. And when they move to IML, our capacity utilization is better, our realization per kg is better, and they also get a superior product. So that is how we want to add. We don't want to add clients who are at very low price range and they go for screen printing or even HTL. We are trying to avoid such low cost and low end clients in the paint segment.
Okay, understood, sir. Understood.
Thank you. The next question comes from the line of Arnab Dev, an individual investor. Please go ahead.
Sir, good evening. Can you hear me?
Yes, I can hear.
Sir, in Q3 you had guided volume growth for FY25 for paints around 12 to 14%. Do you maintain that guidance?
Yeah, we are looking at double-digit growth because of the lubricant, ABG's addition, which will be itself should give us 8 to 10% growth. So having sure of that ABG, even if other segment, Asian paints and others remain at 2 to 3% or 5% growth level, we have one or two major additions in the IML segment, which is giving us some other growth numbers as a new addition. So with all this, we should be in a position to cross 10 to 12, reach 10 to 12% growth in paint this year.
Sir, one more question, sir. In terms of medium to long-term strategy, sir, are we clear on we want to play around these four categories of paint, food, tubes, and pharma?
See, actually, if you ask me, our vision is to move more and more towards pharma and food and FMCG. Not that we let go paint and loops, but wherever the pricing pressure is there, wherever the decoration technique is still age-old screen printing or labeling, we wish to move towards IML. So certainly value addition is one thing which is driving our decisions, and we see a huge opportunity in pharma. Let me explain. In pharma, I have seen in the last 6 months of our interaction with the pharma companies and their packaging departments, the feedback I got from our marketing and even in some of the calls I participated, there is no agile player like Mold-Tek in pharma packaging as of today. I don't want to name them because they're all there for quite some time and some of them are MNCs. They're doing good job at their own pace and in their own strategies. But when we see agility, what I mean by agility is new product development. somebody need to quickly bring in a new concept in the market, the pace at which our established competitors are doing, I notice, is not really praiseworthy. That is where Mold-Tek can show a difference. That is where we are trying to pitch in and talk to our clients that if you guys not only forget about your bottles and caps, if you have some other new needs coming in, you can bank on us because we develop the molds, we develop the 3D concepts, we develop the design concept useful to your application. And that is where we step in right from product concept to mold design, mold manufacturing, and if necessary, if there is an IML in it, IML manufacturing. So that strength is what still we are going to use as an USP to penetrate into pharma packaging. I still see, I was not so positive when we started 6-7 months ago into pharma, but today after interactions with the clients and what I see from my marketing people, there is more and more demand for new small variations. Need not be a complete innovation of earth to moon. It is basically a small minor variations, but that require a mold change, that require a new mold to be developed quickly. So that ability in Mold-Tek is what I'm sure can be a USP going forward in pharma packaging. So in my view, as of today at least, I can state that going forward we will be shifting more and more of our energies and more focus on this high value add lines like pharma and food.
Okay, sir. Thank you, sir, and best of luck.
Thanks.
Thank you. Next question comes from the line of Rakesh Wadhwani with Monarch AIF. Please go ahead.
Am I audible?
Yes, Rakesh.
Hi, sir. Thank you very much for the opportunity. And sir, first question with respect to the paint segment. First, last year we had witnessed the issue of some maintenance work with respect to Satara plant. That's why the volumes were impacted. One of the reasons that plant has come back to normalcy.
Yes, it's come back to normalcy, but one of the reasons why our numbers have dipped in Asian Paints, I explained just now, is that last year Q3 we have developed the thin wall, that is light wall, lightweight containers for Asian Paints, and those molds were developed by us in the beginning. Hence, we got better volumes in the Q3 and Q4, which later on were even manufactured by our other competitors at different locations. So when we come to this Q3 and Q4, those numbers have been distributed among 4 or 3 competitors at every location. So that is one of the reasons why we see a dip in sales to Asian Paints in the last 2 quarters.
Okay. And sir, the Asian Paint has come up with a new product, Asian Paint latex paint advertised with the Virat Kohli. That product has been developed by us.
What is the name? Sorry?
Asian Paint has come up with a new product, Asian Paint latex paint with advertisement done by Virat Kohli. Has that product been made by Mold-Tek?
I'm not very sure because last 1 month I've been traveling. Whether it happened recently or can you check with Rajkumar? Virat Kohli so is a new product launches and Asian Paint. Manona we are supplying. I'll check and let you know.
Okay. Sir, coming to the pharma segment, so one of the key players in the pharma segment that you have also mentioned in the previous calls, Shriji Polymers, Triveni Polymers, their revenues are in the categories of 400 to 500 crore, and in the last 3-4 years, as you mentioned, they have grown strongly 25-30% because of the shift from China and because of the in-country demand. But at the end, their volumes are, the sales are 500 crore, and there are other small companies which are sub 100 crore companies. There are not many big companies in this segment. Any reason for that?
See, that is not an easy line to enter. One big barrier is the technology, the hygienic way of manufacturing practices that are being audited almost like an FDA level, but of course done by Indian companies. That requires very high-end manufacturing facilities. That is one, and consistently maintaining that facility for various audits clients come and do is something which not everybody can do. So That is why this is between some 5 to 10 companies all over across India are able to establish and run. So CG and Triveni, Pravesha, which is a house company of Aurobindo, they are 3 big players, and there are Gopal Das, Dr. Pack, Berry, like that. There are about another 7, 8 companies which are in the range of 100 to 300 crores turnover. So all put together, there is a demand beyond 4,000 to 5,000 crores in the 4,000 crores approximately, and growing at least 7 to 8% every year. And with Indian pharma also adopting DMF standards for their products, then the numbers can shoot up very quickly. And as you might have noticed, Mankind has made an announcement saying that even their local Indian packaging will be meeting DMF standards. So like this, once a big company starts, others have to follow suit. So if that happens, I don't know when it will happen, but over the next few years, then the numbers can shoot up. More than 20-25% growth can be anticipated. So we are in a sweet spot, getting into that in the correct time. And with our strength of mold development, design and concept development, we'll be able to make things faster, for our clients to develop, especially new concepts. We will be much faster than even the established players. So that is where the USP we are looking at.
And sir, one last question from my side. Why there's a increase in working capital in this financial year? Because the cash flow from operation has drastically come down versus last year in region.
If you look at what we borrowed is only 40 crores, but what we invested is 140 crores. Okay, so it was not that money is fungible. We were using those working capital funds which were available for capital needs indirectly. And when the capital needs were met, automatically the working capital needs are, in fact, the monies that have been collected in the QIP and all were kept in working capital account to save the interest. So when these monies were used, the working capital is coming to the natural level. But today, even at that level, our drawing power is close to 100 crores. But our utilization is hardly 69-70 crores. So there's still a big gap of unutilized working capital. You understand?
Okay. Yes, got it. Thank you very much, and best wishes always. Thank you.
Thanks.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you very much. Thanks to everybody for being a part of the conversation today. And in particular, I want to thank Nirmal for arranging this con call, and to the operator. Thank you very much, and wish you all a very great day ahead. Thank you. Bye.
Thank you. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us. You may now disconnect your line.